Hey, John Hunter with Guaranteed Rate. This week's topic is top reasons to accept a VA offer if you're selling a house. So I hear very often, or I see a lot, where homes will be listed and they will just offer terms like cash out and conventional financing only. FHA VA is sometimes marked, but a lot of times, if there's conventional offers on the table and there's a VA offer on the table, a seller will be instructed or advised by certain agents that a VA offers a weaker offer, or somehow it is not as strong, right? And that all else being equal, they should go with an offer maybe with a little bit more money down, that type of thing. But a couple reasons why that's not true and shouldn't be true, and honestly, it's can be bad advice for a seller. One, VA underwriting flexibility. VA is the most flexible loan product there is out there. Debt to income ratio on conventional loans is very often restricted to 43 to 50% debt to income ratio. VA can go above that. VA will go sometimes much higher than that if it makes sense. So right out of the gate, VA is more flexible. So there's a higher chance of getting a loan done. Also, credit wise, VA isn't going to beat people up on credit score. VA is going to allow much lower credit score in qualifying. And that really matters when you get into the jumbo range, where jumbo loans very often require 700 or even 720 credit scores. And VA will go down, as low as in some cases in the low sixes or even in the fives, depending on the loan amount. So, consistent guidelines. VA has changed the least of all the loan products out there. Yeah, FHA is updated, conventional updates constantly. VA is relatively unchanged over the last, I don't know, 20 some years that I've been doing it. Of course, they've updated a few guidelines here and there, and some things have changed, some fees, structures, whatnot. But for the most part, it's pretty unchanged, and they're very consistent and, and liberal and very flexible and very borrower centric. I mean, they really take care of the vets. Um, Jumbo is really a sweet spot for VA, where most jumbo loans in King, Pierce, and Snohomish County and Washington State, and a lot of states around the country, in our those three counties I mentioned, it's up to 900,000, 972,000. But in a lot of counties, it's much, much lower around the country. So VA will actually lend up to $3 million, and typically, I believe it's up to 1.5 million zero down. And VA will over that amount, say like in King County, 972. If you go above that, you have to put 20% down. Where VA will let you go zero down. The rate's better on VA. The debt to income ratio is more flexible on VA. We're talking jumbo. It's night and day. Um, so the underwriting flexibility is off the chart, and your chances of you closing a transaction when you have a borrower um, that might be tough or borderline just are way higher on VA just due to the flexibility alone. So that's a great, great one. The other one that is probably even more important, and probably the main reason why uh, agents will tell sellers that VA is a bad option, is the appraisals. So appraisals back in the day, before, say, I think 1999, were processed very differently. And in the 90s, we had issues with appraisals coming in low left and right. And there was major issues. And for good reason, people were shying away from VA loans. VA has never shaken that stigma from back then. But they have changed dramatically. They started a process called lender approved processing, which allowed us lenders to underwrite the appraisals. They implemented this amazing process called the Tidewater Act in 2003. And what that is that if an appraiser is going to come in low on a purchase, they have to notify all parties that they're having problems coming in low, to allow the seller and the buyer and the agents to provide information to help the appraiser before the appraisal is done. There's no other product that does that. So if you're going to get a low appraisal on VA, they let you know ahead of time and give you an opportunity to fight it up front if you have a unique property. So there's no other product that does that. This is so flexible. Plus, the appraisers, unlike conventional, keep all the money. And I know that sounds strange, but the reality of it is that on conventional loans, the appraisers have to split the money with these management companies that place the orders. With VA, these appraisers sign up directly with the VA portal, and the money that is a set schedule for them It doesn't change. The VA sets the fee up front. They get to keep it all. So what we're seeing is, and what I've seen is a higher quality appraisal, a higher quality product, because these appraisers really value that business and they're accountable to VA, right? They have to answer to VA. If there's a problem, there's a really specific process that we go to, and they don't want to bite the hand that feeds them. Where conventional appraisers very often aren't as accountable. There isn't a system in place like that. Sure, if they make major mistakes, and management companies can remove them from their list, but it's not like VA. VA is much more accountable as far as their process goes. So that makes a huge difference. Now, why does this matter? Why does that Tidewater Act and whatnot matter? Let me give you an example of why it matters. So, if you have a 5% down conventional loan on a $600,000 purchase, that's a $40,000 down, right? And if you have the same loan that's VA and they're going 5% down, what if your appraisal comes in $40,000 low, right? On a conventional loan, that price has to come down $40,000 unless the buyer has $40,000 to play with and can come up with the difference, which very often, if they had it, they probably would have put more money down to begin with. That's a dead deal. So if you have a low appraisal in that scenario, chances are your deal's dead. Where on VA, right, because they can go zero down if the appraisal comes in low up to $40,000. The only difference is to the VA fee, which is like $3,900. So basically, a $3,900 adjustment can make up for a $40,000 low appraisal on a VA. So there you go. I mean, I can come up with 20 examples like that, but there's a scenario where the buyer doesn't really have to come up with much more money. The seller doesn't have to cut their price dramatically. And that's how we just handled a $40,000 low appraisal. So that is why VA is a superior loan in so many ways. And that's just a huge one. As a seller, don't shy away from VA loans. They're not bad. They're more flexible. They're higher probability of closing. And they're vets. We all should support them. They protect us, and it's not a bad thing. We all should do our part a little bit. But hopefully that explains it a little bit. If anybody's got any questions, I'd love to help you out. VA is my gig. I love it. Do a ton of them, and would love to answer any questions anybody has. So have a wonderful week. It's August 7th. It's a beautiful week up here. Just ended Seafair weekend up here in Seattle, and hopefully you guys have a great week. John Hunter, guaranteed rate, 206-856-4685. Feel free to call me anytime. Thanks a lot. Bye-bye.